I have a secret button, and this button will generate thousands of trading strategies for me. But now, which one do I choose? Because realistically, I'm not going to trade 1,000 strategies on my live account. Today, I will be using a tool called EA Studio, and this is a web-based software that will create strategies for you automatically. And I did run this already overnight for about 24 hours. So what you see here is the result of a 24-hour run. And here I'm using the reactor, and there are two options, the generator, reactor, and validator. I personally like the reactor because this has robustness testing inbuilt within it. And you can see here I'm using premium data on the US Japanese yen on the 1 hour time frame, and I am using data from 2028 to 2022. And the reason I am using data from 2008 up to 2022 because I want to use this data to generate strategies for me, and that I want to take those generated strategies and test them from 2022 up to 2025 to see how they would have performed since 2022. The other settings I have running in this application is I'm trading at the smallest lot size of 0.01. I'm trading long and short, and I want a take profit between 10 to 200 pips. And I'm using the default preset indicators that come with the application. And for a acceptance criteria, I want a minimum profit factor of 1.6 and at least 50 trades for in sample, and 1.2 profit factor with out of sample, and 10 trades out of sample. What in sample and out of sample means: for example, we're using data from 2008 up to 2022, but we're not going to use all that data to generate our strategies. We're going to use about 70% of it. And so this is called in sample. So we use this data to generate our strategies. And the biggest issue with algorithmic trading is that, yes, a strategy can perform really well during this period, but you take it and trade it outside data that the strategy has not seen before, then potentially it could just not work. So we're going to take this 30% period and call it out of sample. And that is the next settings. Under generator settings, I have it set to 30% out of sample. I also have something called Monte Carlo validation at the bottom. So if I click that, you can see I've got all the different settings turned on to test for robustness testing, which is another test where you help reduce the probability that our strategy is going to just not work in real live market trading conditions. After all that, we have a total of 11 viable strategies out of hundreds and hundreds of different combinations. And you can see I've sorted it by R squared. You can also sort it by balance line stability, which is very similar. It just pretty much says how smooth the balance line is. And this white part here, that is in sample, and the green part is out of sample. And from all the testing that I've done in the past year and a half, I've found that the smoother the line you see in both in sample and out of sample, the better your forward testing results are. So at the top, you can see this is the smoothest equity line we have in the 11 strategies. If I go all the way down to the bottom, you can see this bottom line here, that is much more jagged. So from my testing, this bottom strategy here won't yield great results. But let's test it out and I'll show you exactly how this works. For illustration purposes, I'm going to download this bottom strategy here by pressing this download button, which will download the strategy for me in MetaTrader 4 format. And I'm scroll all the way up to the top. I'm going to grab the best strategy we have, which is number 8374, and hit the download button again. Now that I have downloaded the two files, I'm going to clear all this data and I'm going to change the date range. So now we are going to go from 2022 all the way up to 2025. Remember that these strategies have not seen this data yet, so now we're going to simulate trading and see how they would have performed from 2022 to today. Next, I'm going to head up to the validator, and I want to make sure that all my tests are turned off. So everything is now in sample, and I have Monte Carlo validation turned off. And under strategies, I'm going to drag the worst performing expert advisor, which is this one down here, and click start. And you can see this one has made a total profit of $239 with a profit factor of 1.73. which I admit is not that bad. But let's take a look at the other strategy. So remove the old one and add the better performing strategy according to the smoothness of the line. Drag it up to the top again, hit start. Now there are two strategies in the collection, and up the top here down, this is the smoother equity chart we saw. We can see that there are more trades of 183. The profit factor is higher at 1.86, and the profits is about double what we saw before, making $419 trading at 0.01 lot size. And while that is great, that is one example. Let's take a look at another example. Here is another window I have also running Expert Advisor Studio. You can see I have been running it for 1 day, and out of 500,000 strategies, I have a total of 18 in the collection. And you can see the settings are very similar. The only difference here now is I'm running the pound Japanese yen. So head over to the collection, and I'm going to download the top strategy according to the smoothness, which you could call the R squared or balanced line stability. They're both very similar. Let's go with R squared for now because it is a measurable attribute, and I'm going to download this top smoothest line strategy. Next, let's head over and grab the worst performing one, which is this one here, and download. Again, head up to the top, clear out all our strategies, go over to data horizon, and we're going to go from 2022 up to 2025. And head back to the validator and re-import our strategy again. Starting off with the worst strategy, and that has made a loss. Looks like we lost about $100. So let's go back to the validator, and now we're going to grab the best strategy, press start, and that one made a win. So here we are seeing consistency. The best strategy in our backtest is also performing well from data that it has never seen before, and the other strategy which did not perform as well in the backtest is making a loss in data it has never seen before. That is the exact principle I have been using to trade on my Darwinex Gold account since June of 2023. If you're unfamiliar with Darwinex, this is a platform where traders who don't have a lot of money can build a track record and attract investor capital. When you sign up to Darwinex Zero, you are not risking your own money, but you are risking their 100K simulated account. And unlike prop firms who impose so many restrictions and so many rules on your trading style, you can trade in any way you want. You can scalp, you can do high risk trading, you can do low risk trading, you can hold over a few minutes, or you can hold over months and days. They want to attract the best traders and the best talents and reward them with allocation and seed capital. For example, like these people here who have made 162,000, 531,000, 189,000 and 920,000 euros in the past few years. I have been trading with the Darwinex for the past year and a half and have made it to Darwinex Gold, which is stage 3. The first stage is the calibration stage, and the silver is the second stage, and gold is where you want to hit and start earning investor capital, because that is where the real big dollars can come into play. Yes, you can get Darwinian allocation, and I've received a total of 330K in Darwinian allocation, currently managing 75K, but investor capitals you can get much more, in the millions of dollars. So currently I only have $4,000, which is not a huge sum of money, but as the years progress, hopefully I will have a track record as smooth as the top trader in Darwinex, who is currently managing about $26 million in investor capital. Back to our video. Now we've seen already that choosing a smooth equity chart from the backtest will also more likely yield you better results in the live trading stage. That is not the only thing you need to consider when trading with algorithmic strategies. Another thing you need to think about is whether you should have a long and short strategy combined. A lot of the times these are symmetrical. For example, look at this strategy here. The entries are based on the RSI and Bull's power. And if you look at the short entry, it is the opposite signal of a buy trade. Which raises the question, should you build strategies that have the same short and long entries, just reversed, or should you build strategies separately? And that's the topic I cover in this video right here. Thanks for watching. Bye.